All right, good morning, everybody. Trendy John here from Simpler Trading. Let's go ahead and start our broad market analysis. I will be covering today, which is Sunday, 26 into looks like the 31st. So we'll be ending the month this trading week. We do not have anything to do tomorrow. It is a holiday, Memorial weekend. I hope you guys are having a great weekend. I hope you have things planned. And we will be getting started though on Tuesday, the 28th. We do have two classes coming up this week. So we have our breakout session of the PMZ and also Fibs. So I'll be going over trendy Fibonacci specifically. So I look forward to seeing you guys there on those nights. And they will be starting at 7 p.m. Central. All right. And it's still not too late to make sure you sign up for those. And anyone that's come in for your trials, those will probably be coming to an end this weekend. It's been our absolute pleasure. It's been a blast. We've done really well. And I hope you've learned something. Most of you have joined us, and we look forward to uh, this trading year with you and some of next year as well. So, again, thank you so much. Let's go ahead and get started. So, the first thing that I want to talk about is this week's US economic report and Fed speakers. I like to use Market Watch, so I just come over here. This is free. A lot of people ask what the URL is. You could just look right up here and see that, guys. Okay. So we're going to be again looking at the 27th through the 31st. You can see Memorial Day holiday. 28th, basically we have some consumer sentiment coming out, and these are Eastern time. All right, so this is coming out about an hour and a half or so after the market open, and everything else is basically Fed speakers, just noise to push price to supply and demand that we'll be talking about here in a few minutes. On Wednesday, the 29th, we have New York Fed President John William, again, another Fed speaker. Fed Beige Book, Atlanta Fed President Raphael also speaking, but that's later on at night. And then Thursday it gets a little bit more interesting with initial jobless claims and then GDP, and then a bunch of Fed speakers as well. Friday, May the 31st, ending out the month. I'll be really interested to see how our monthly candles close out, but overall, everything's looking really bullish, and we continue to buy the dip, and we'll talk about that here shortly. As you can see, PTE coming in and Chicago Business Barometer. My overall sentiment, again, all of this is just noise to push price into the zones that we are already identifying on your charts beforehand. Now, most of you, and when I say most of you, I mean like most of you have the trendy indicator, so you could also replace that by saying this is news catalyst that pushes price into the trendy edges or to our levels. All right. Next thing that we want to be looking at is moving on down into earnings. So I use over here on X, formerly known as Twitter, I use Earning Whispers. Okay, and this is what I like to use. If there's any questions out there and you need to ask your broker just to verify times, then do so. But I've always relied on these guys. They're absolutely top notch. I love it. It's an easy calendar to use. And you can see here that I have some of my favorite names that are coming up this week. One of them is Kava. They have absolutely crushed it this year. Kava and CELH were like my top picks for this year, as far as like equity or even long-term trades. And they're doing very well. So I'm obviously very interested to see how Kava plays out after their earnings this week. So again, tomorrow after the close. Then, far as my picks, what I would like to watch, CRM, Chewy. I have a long-term trade in this as well. Leap trades that I've had on for quite some time. Okta, and then moving on down here into Thursday, we are looking at Costco, Dell, Kohl's, and our picks from last week using, um, a couple names out there that we covered. I'm trying to remember off the top of my head. It was my wife's favorite stores like Ross and TJ Maxx, and they both did really, really well. So I hope you guys got the lead on that. Foot Locker, sure, if you're interested in it. I'm not really that interested in Foot Locker. Zscaler, Dollar General, Mongo, Best Buy, Ulta. These are my favorite names in here. And then Friday, not much going on there as well. All right. So that is our earnings coming up. And then last week's neutral results. I'll pull down the room here really quick so you guys can see this. We'll open this up, just kind of go like this. And overall, the results you can see, yes, we did break above the neutral, but this was after 4 weeks up. We were a little cautious coming into this past week, but my overall sentiment was bullish. And you could see that the market basically went sideways, found some buyers, and then by the end of the week, it just was really flat, in my opinion. The QQQ, same way, gave you, the buy trigger to the upside. It did hit T1 and T2, almost into T3, pulled back. Again, pretty sluggish, I thought, the action last week. But if you just kept the sentiment and bought the lower dips, you did well. We actually did really well, I thought, on Friday, PANW, and then also Coin. Both of them ripped. It was amazing. So I absolutely love that. But the week itself, just not much going on into the 3 day weekend. All right. And then we have a short week this week. So I'd expect kind of the same thing, basically sideways, choppy action. Now we do have our new SPY and QQQ neutral strategy, and it is going to look like this here. All right. So please take a note, come back, pause this video. You can put these levels on your chart. Please watch the very quick video on how I trade the neutral strategy when I do trade it. It is really straightforward. We just treat it like the PMZ, but on a higher time frame. Your risk is the difference between these two numbers. Targets to the upside are these bad boys. And because we're in a bullish market, honestly, what I look for if we pull back is for buyers to step in around target 2 and 3. Again, if we were to pull back there, sure, you can go short underneath here. But again, I'd be looking for buyers to come in here. It's just the market that we're in. All right. Same thing over here. Go ahead and copy your QQQ numbers. And again, these are our neutral strategy. And 99% of the time, I am changing the neutral strategy every weekend. Every once in a while, we'll have the same numbers. But again, these are our new numbers. While you're doing that, don't forget to give us a like if you appreciate the broad market analysis and you use it every week. I'd love to hear about it. And thank you for your support. Seriously, I really, really mean it. Moving on down here, we're going to take a look at SPY, the bigger picture. I'm going to tell you right off the bat that it was, again, really slow. I'm using TradingView here. This is the 3 month or quarterly chart. You can see back here, back in July, we went inside, and then we went inside and up. And ever since then, it's turned into a really bullish formation. Last week, I said 3 white soldiers. That's just basically a formation where you see this type of action. I said it's very bullish formation and continuation of strength. 535 was my next target. Support has now moved up due to the new high. Support is now 504 by 485. Now, this week, I don't think I've done this all year, but this week I have absolutely no update for this because nothing really happened. Okay. Sure, we popped up. I think we got very close to our 535 target, but yeah, nothing's really happened. These levels over here are fib extensions. We'll be covering that type of stuff on our class this week, and I'll go over how to use that and for especially for future targets. Okay. Let's move on to the Qs. This is going to be the next bigger time frame chart that we're going to look at. This is for my traders who want to concentrate on the bigger picture and not have to look at a chart every single day, which I say it like it's a bad thing, but I love looking at charts every single day. But for those folks who don't have time, this is where you want to put your concentration again on the bigger picture. Now, last week, 3 white soldiers, same story. This is a very bullish formation and a sign of continued strength. This week, a lot of emphasis will be put on NVIDIA earnings. No matter what happens, this chart stays bullish above support for the long term. 458 is our next target. And you guys can see we did come into 458. So we hit our target. That's my update for this week. I'll create some new fib extensions for targets and move support up. The reason why I moved support up is because we made a new high. So it didn't change very much. It's like 432 by 415. And then our targets to the upside. Now, these are pretty far away if you think about it. 458, and now we're looking at 469. So that's quite some distance away. If you need a target that's closer, that's where you'll use the neutral strategy to help you get those closer targets. But again, this is a bigger target because we're looking at a higher time frame. All right, let's go over to the dollar DXY. The dollar overall, my notes for this week, I'm just going to read those out real quick. The market had a pullback as the dollar pushed. All right, and let's go to a smaller time frame. All right. So the market had a pullback as the dollar pushed into that inside and down, but then after the rejection, the market continued higher. Basically, exactly what we talked about last week. So overall, the bullish sentiment was still there. Yes, we had a pullback. And talking about that pullback, you guys already heard me in the room. You know, you would have thought like World War III had happened. I think traders, this was a wake up call for you. If your allocation was over allocated, then you felt a little bit of pain that day. I kept it cool, calm, collect. I'm looking at the big picture. Every once in a while, you're going to have to, take a drawdown. You're not always going to time the market perfect. Um, I'm sorry, but I had to laugh because seriously, I think people are being a little complacent here, guys. You better make sure you got your allocation in check because we're not going to be perfect all of the time. But the crazy thing is, the next day we were trimming profits and doing our thing. And if you got spooked, that was just a lesson to be learned that anything can happen. So again, always know your risk before you take a trade. All right. So the dollar, you guys can see this. If I come over to a weekly, I want to show you what I meant. And I said this the previous week, look for price to hit here and then reject. And that's exactly what happened. And the dollar, this is a weekly chart, the dollar pushed up. And as it was pushing up, the market was pulling back. And this is all, pretty normal here. But if you're following supply and demand, then you're looking for the rejection here. That's exactly what we get. And then we start to turn things around on Thursday, Friday. So again, not bad. Things worked out very nicely. As far as going into this weekend, caution above 105 and a half, and bulls stay in charge as long as prices staying below 104.25. Now you could see that price is at 104.74, so basically I think it's going to be choppy between those two levels, but those are my two major levels going into this week. All right, so the 10-year treasury, let's go ahead and look at that. That's TNX here on TradingView. Again, this is a bigger look at that. We came into some demand. It's popped a little bit. It's going sideways, and that's all I really care about. So the reject at 4.5, as I expected, happened. We put that on there the week prior. I talked about it. The market is not in the clear, though. Caution is still warranted, but as long as the TNX stays in the cloud, expect some chop and a little bit of volatility. Not a whole lot going into this short week. All right. Skew, this one's really important. I feel like I can always talk about the skew forever. But I gave you two charts this week, so just make sure you look in your notes. We are at extreme levels. If you go back and you read the SPY or the Q and you were to put that chart behind here, anytime that the skew is reaching up into these levels, basically, if you were to look at a SPY chart, the timing is the variable. Usually we're 1 to 3 weeks or somewhere in there, and then the SPY or the Qs start to drop. All right. Now, once again, quick, little look at this. We've been staying here for over a year. These extreme readings usually mean that the market's going to pull back a little bit, but this year it's just been bullish pullbacks, if you will. So you need to really concentrate on those lower time frame demand zones. This is where we want to be buying SPY for 5 to 10 days out. If you've been following the overall broad market analysis and these levels, you've been doing, I would imagine quite well because buying at this level 5 to 10 days out has worked almost every single time on the SPY calls. Now that we're up here, I'm saying be careful. All right, we could see a pullback. And with some of the things I've shown you, like all-time highs and the dollar kind of right there on the brink and the TNX right there, it's important to understand anything can happen. Now, what is happening is that when we get the pullbacks, they're just so small for the most part that it's just difficult, I think, for traders. I just think the risk to reward is not there for the short. Um, you know, I I feel like just this last week was probably the best week to be short for a day. But other than that, it's been better to wait for the pullbacks into demand and take trades out of that and then trim as we're moving up. All right. But anyways, these are your levels. They are extreme, and just note where we are. Now, what's really, really interesting to me is when we come into the fear and greed this week. This is interesting, right? So you got these extreme readings, but we actually ticked back from greed all the way to neutral, and I'm like, really? That kind of blows my mind. We're at all-time highs, and we're neutral, right? And the skew is really, really high. Something doesn't feel right. I don't really like putting bias into this, but it kind of feels like we're just going to melt up. The volatility index is going to fall, keep falling. It's going to be pretty boring out there. And it's going to be like one of those things where in the mornings, and this has been kind of common in the morning, you get like a quick pullback, almost like a V-shaped recovery. It scares a lot of people out, but it really is just coming into an area of demand, and then we see the market kind of melt up very slowly. All right. So this makes me feel like we could continue to see melt up, volatility index kind of come in, and just just follow the trend is what I'm trying to say. All right. All right. So futures. Let's go ahead. This is my favorite part of this. Let's start with the ES futures. Kind of go over what's happened so far. We hit our target. I can't make this stuff up. We hit it 53.64. We pull back. The 23.6, we'll be talking about the Fibonacci this week, worked very, very well. Notice that the 9 EMA is now confluent with the 38.2. Notice that the 618 is now confluent with the inside and up formation. This is very important. We'll talk about that as well. And again, 9 EMA up here at the 38.2. That's all I have to say about this. I do believe that all of this is support. And if we get up and over 53.64, that turns into support. And then we're looking for a move up into 54.97. Just like the quarterly chart, this is a weekly chart. So I look at this like we went over this past week because we had that we had that pullback that I feel like scared a lot of people. And I said, look, it's okay if the intraday charts don't work out. You need to remember what I'm talking about on this broad market analysis. You should quickly flip over to your blueprint for the weekly, and you'll see that it actually just came right into our support level. All right. Moving on into this week, this is our dailies. These are our new triggers. Again, you can pause this, put these levels on your chart. I reference why I put the levels where I have them. So just again, look at that. We are above the 9 EMA. We came into the weekly edge. We popped. Your new weekly edge is going to be your resistance, and then up here I have a fib extension that should match. Well, this one is a little bit different. I use some structure in here. Okay, we do have an inside up formation here, but it was tested back here on May the 14th, and then as of right now, we just closed on an inside day. Again, folks, look at this, absolutely beautiful. We hit the resistance, or actually, I want to say this was your short or your resistance from last week. We pulled back. We came right into the trendy edge. We found buyers, got back above that cloud. So again, all looks normal when looking at the technicals. On the 4 hour, can't make this stuff up. This is the same zone I gave you last week. I said that it looks good. It came down into that. It popped right out of there, and taking this trade from 52.78 all the way into 53.27, that's about 50 points or $5 in the SPY if you followed the plan here using the 4 hour chart. Now let's go ahead and go into the NASDAQ. And before I move on, so again, I continue to be bullish. I just need you to understand during the pullbacks to look at your other time frames and understand where we want to get long. All right. NASDAQ futures ended up 174 points on Friday. Um, this chart over here on the weekly looks a lot like the ES. We finally, and I talked about this last week, I said that to me, the NASDAQ and the Qs haven't done anything this year. They really haven't. They came up, they made a little high, they went sideways forever, broke down, scared a lot of, I would say, paper hands out of trades if you didn't know where your demand zone was. Came right down into the demand zone and then moved up very nicely to the upside here. All right. Now we ended on 5 weeks up. You'll notice the 23 and 38.2 is now going to be your support. We got above that sideways channel. We're finally above it. What I'd like to see by Friday's close is that we could stay above what was resistance. So again, even if we get a pullback and it's kind of deep, I want to see that Friday we can close back above this gray box here. Okay. And moving down, let me make sure I didn't miss any notes in here. The 61.8 is aligned with the new inside and up, and you can see that here as well on the NASDAQ. And we are 5 weeks up. Okay, so a little extended, a little bit of top and wick towards the end of the day. On Friday, kind of pulled back, but overall looks pretty healthy. Again, short week. I'm not expecting a whole lot. Moving on down, let's get into the daily. This is what it looks like. We came up, we smacked our level, we pulled back. These are new levels. Put these on your chart. I went ahead, just like on the ES, and annotated why I put these levels here. We are above the cloud. Everything looks really nice. Far as like, let's just say we get another surprise and the market pulls back. I like to think that this candle and right in here is going to hold. So right around this trigger long in case we get a deeper pullback. All right, an unexpected pullback is what I should say. Moving on the 4 hour, a little bit different than the ES. It didn't come down into the zone this past week, but it did create or is creating a new zone. So you have a new zone here. I can't tell you that it looks amazing or anything yet because it hasn't fully, even though it's an inside and up, it really hasn't moved enough for me to call it demand. I would rather call something like this support. So just understand that this looks great if price comes back into this level. Other than that, guys, my overall sentiment is have fun this weekend. It's been amazing. I really appreciate everyone. But at this moment right now, I want you to get ready to have an amazing weekend with your friends and family. And just remember this broad market analysis. I do it every single week. I love doing it. I love that you guys use it. And I hope it really helps you out. We'll see you in the room. And if you're not in the room, make sure you sign up at simplertrading.com. Have a great day.